guys, MTM here, and today I wanted to show you some trades. The premise of this video is if you've ever missed a trade and you felt upset about it or you felt angry about it, this is the video for you because you can understand how to deal with these emotions so that you don't miss your trades moving forwards. Today there was a trade within this gold pair over here, and there was two things I wanted to show you that happened. Now, in regards to what we're seeing here, what we have here, if I just use the line chart, you can see that there is a M formation coming out of the Asian session box. This is this box over here. And what you can see is if we look at it here, there is divergence as well. Check the video out on TDI for divergence for more information on that one. So what we see here is we see price having a higher high here, having a lower one here. So we have divergence in terms of that. In terms of timing, it is just coming out of the Asian session box over here. It bounces off the 13. It comes past the high over here. So if I have a little line here, it just comes past here, but then closes underneath. Closes on the 13 EMA. That's great. So how do I know this is a good trade? Look at how many candles are. We have 10 candles. We want more than 6 on average for it to be a good trade. Number one. So we've got the divergence with TDI. We have the where price is on TDI as well. It's in the 60s. That's 2. We also have the length of candles. That's 3. This is called the type 2 out of the edge M because it's coming out of the edge of the London section here. This is more of an advanced setup here as well. So the beginners among you wouldn't take a trade like this per se. Now, what we can see over here, if I just have a little icon here, let me blow it up a bit. What we see here is a railroad track. This is the second leg pattern that we are looking for in order to confirm this is the trade that we want. So entry would have been either here, or if you wait until the 13 close, it's going to be here. The difference is about 200 pips. All right. So you can take the entry here or above here. So I would have taken it around here-ish. Have my stop loss above here, and then you can see price comes downwards. How long you're going to keep yourself in the trade is up to you. Myself personally, I would look at around 1350 pips or 1400 pips here. And so we can see that that's sort of covered in this area here. That's this here. So the time it took for this trade, gold can move very quickly as well. Time it takes here is around 3 hours. Now, while that did happen, what we saw here was another setup, and that was this here. Now, I missed this trade here. I actually saw it happen, but I missed it. It wasn't because of fear. It wasn't because of anything else. I happened to be doing something else, and I saw it form, and I could have taken it, and I should have taken it, but I did. This one, on the other hand, this made a star formation, a railroad track, excuse me, instead. But if I was waiting for the close of 13, I would have got in here. Because my stop loss is 200 pips, I would have been taken out of the trade. So what you can do instead is wait for a pullback. And now this gives me another railroad track as well, which means you could enter the trade here, put your stop loss. If your risk management is enough that you can do this much, then fine. But normally I would do 200 pips, and I'm looking at 1400 pips. That means I can take this here, and that takes 30 minutes. Now, as of this recording, we can see another setup, which is really interesting, which is this one right here. So notice how there are a lot of setups happening. It really depends on timing as well. So if you missed one, there was always something else happening. And if you missed on this pair, you might want to use another pair and trade on as well. My advice is to always have more than one pair to trade. just because in case you miss one, you can always do something else. So the first leg is this one here. It comes back again, and brings another railroad track. So that means an entry could be here. So these are what gold produced. One thing to note here as well is the Asian session pips is over here. That's telling you how big this is. Typically, with a range of anything above 1,000, you're looking for potentially type 2 setups. If it's really big, for example, like this one was yesterday, this was 3,000 pips. This is pretty much the whole day. As you can see here, price didn't do anything because everything happened in the Asian session. Note the M formation over here, and then if you were up at this time, depending where you are in the world, for me that's 2:45 in the morning in the UK, so I definitely wouldn't have taken that because I'll be asleep. But you can see here, price is simply just consolidating here. Now, if we take a look on the 1 hour chart, what we see here, there's been two drops. One here, came back, another one here. There's going to be a big video coming up around the market maker playbook, so please stay tuned. Please like, comment, and subscribe. Help me reach the goal of getting more people to see these videos. And thank you for your support just from getting this far in the video. So you can see here that it's consolidation. The next move that I'm anticipating is for price to come downwards. Ideally, it would be to come upwards and then come downwards, but doesn't always happen. So we'll have to see. All right. So with that in mind, I just want to say thank you very much for watching this video. Psychology is one of the major factors when trading. If you're a beginning trader or you're a very experienced trader, psychology is always there. So if there are other topics you would like for me to discuss on this channel, please drop them in the comments. Give me some suggestions of what you think you would like to see, and I'll make videos on those points. So with that in mind, this is MTM signing out.